So you're thinking about making some extra money online in 2025, maybe.
Yeah, lots of people are looking into it.
And maybe Forex trading caught your eye?
hmm
Or perhaps, the whole world of online income streams? Well, you're definitely in the right place.
We're doing a deep dive today. We've looked at articles explaining Forex, different online money-making models, even a blueprint for a viral YouTube video on this exact topic.
And some really solid book recommendations too, right?
Mm.
Covering trading, market history, the works.
Exactly. And the goal here is to give you the essentials, the core ideas, strategies that might work, and really importantly, the risks involved.
We want to give you those aha moments,
Mhm.
some surprising facts maybe, but without, drowning you in detail.
Right, a shortcut to understanding, basically.
Okay, so let's jump right into Forex trading first. What actually is it at its core?
Well, Forex is short for foreign exchange. It's basically the buying and selling of currencies. It happens in this huge, decentralized global market.
How huge are we talking?
Uh, Truly enormous. The daily trading volume is around, get this, $6.6 trillion.
6.6 trillion. Wow. That's
Yeah.
that's almost impossible to imagine. So it's not like trading stocks on, say, the New York Stock Exchange.
Not at all. It's totally different. Stock exchanges are centralized. They have set hours. Forex is decentralized, runs 24 hours a day, 5 days a week.
Oh.
It's this global network connecting banks, big financial institutions, and individual traders like us.
Right. So what's the main reason for this giant market? What's its primary function?
Well, fundamentally, it's about facilitating international trade and investment.
Hmm.
Think about it. If a German company needs to buy something from Australia,
Uh-huh.
they need to swap euros for Australian dollars. The Forex market is where that happens. And those exchange rates are constantly shifting based on supply and demand.
Got it. Okay. And when people talk about trading Forex, we always hear about currency pairs. What's the deal with those?
Currencies are always traded in pairs. You always have a base currency and a quote currency.
Okay.
Take GBP USD, the British pound, versus the US dollar. GBP is the base, USD is the quote.
Right.
So if you buy GBP USD, you're basically betting the pound will get stronger against the dollar. Selling is the opposite bet.
Makes sense. And what about the spread? I hear that term a lot too.
The spread. That's a key cost for traders. It's simply the difference between the price you can buy a currency at the ask price
Okay.
and the price you can sell it at the bid price. So say GBP USD is quoted 1.3428, 1.3424.
Yeah.
That difference, 0.0000, is 4 pips. Pips are the tiny price movements in Forex.
So that's like the broker's commission built right in.
Exactly. The market has to move past that spread in your favor before your trade even breaks even, let alone makes a profit.
Gotcha. So tighter spread is better for the trader.
Yeah.
Who are the main players moving this massive market? It can't just be individuals.
Oh, definitely not. You've got the huge players,
Yeah.
central banks like the Fed or the ECB, major commercial banks, big hedge funds.
Right. The big mun.
And then you have retail traders, that's individuals like you or me.
How do we even get involved? Sounds pretty exclusive.
We typically go through Forex brokers. They provide the trading platforms, and crucially, they often offer leverage.
Leverage. Okay, that word comes up constantly. What exactly is it? It sounds powerful.
It is powerful
Okay.
and potentially dangerous. Leverage lets you control a much larger amount of currency than the actual money you put up in your account.
Like borrowing, kind of.
It acts like it. Say a broker offers 50.1 leverage. That means with just $1,000 of your own money, your margin, you can control a $50,000 position in the market.
Wow. Okay, so that massively increases your potential profit if the market moves your way.
Exactly. But, and this is the critical part, it magnifies your potential losses just as much. A small move against you can wipe out your margin very quickly.
Right. Cuts both ways.
Got it.
What about timing? Is it busy all the time, or are there better times to trade?
Definitely not equally busy. Liquidity, how easily you can buy or sell without moving the price too much, varies a lot.
Okay.
The London session is the biggest, handles about 35% of the volume.
Right.
And when London overlaps with the New York session, that's usually when you see the most action, the highest volatility. Peak trading time, basically.
Good to know. So what actually makes these currency prices move up and down? It's not just random, is it?
No, not at all. It's driven by loads of factors, but key ones are economic indicators. Things like interest rates set by central banks, GDP growth figures, employment number, they all have a big impact on a currency's value.
So, like, if the U.S. Fed raises interest rates.
Yeah, that often makes the US dollar stronger. Higher rates can attract foreign investment seeking better returns, increasing demand for the dollar.
That makes sense. Okay, so we have a handle on the basics. Let's talk strategy.
Mm.
How do people actually try to make money doing this?
Well, there are several common approaches. One big one is trend trading.
Okay, trend trading.
It's about identifying which way a currency pair is generally moving the trend and then trading in that same direction. You're betting the trend will continue.
Right, like swimming with the current. How do you spot a trend?
Traders use tools like moving averages. They smooth out price action to show the underlying direction.
Moving averages, okay.
You might hear terms like a golden cross. That's when a shorter-term moving average, say the 50-day, crosses above a longer-term one, like the 200-day, often seen as a buy signal.
And the opposite?
That's a death cross. Short-term crosses below long-term, a sell signal. Think about the euro during the debt crisis. Euro SD was in a long downtrend. Trend followers did well there.
Got it. Ride the wave. What's another strategy?
Range trading. This works best when the market isn't really trending strongly up or down, but bouncing between specific levels.
Like hitting a ceiling and a floor over and over?
Exactly. We call those resistance, the ceiling, and support, the floor. The strategy is simple. Try to buy near the support level, expecting it to bounce up, and sell near the resistance level, expecting it to fall back down. Works well when things are relatively stable, economically speaking.
Okay, buy low, sell high, but within that defined channel, what's the third main one?
Breakout trading. This is kind of the opposite of range trading. You wait for the price to break out of a consolidation pattern or range.
Do you wait for it to punch through the ceiling or floor?
Precisely. The idea is that once it breaks out with conviction, it'll likely keep going in that direction for a while. Like if USDJPY breaks above a key level, like 110 by 0 after being stuck below it.
You jump in long.
Yeah, a breakout trader might see that as a buy signal. But there's a big but.
Uh-oh.
False breakouts happen. The price pokes through, then snaps right back. That's why stop-loss orders are absolutely critical with the strategy. You have to limit your downside if it's fake out.
Stop losses.
Yeah.
Okay, that brings us to risk management. You've mentioned it a few times. How vital is that in Forex?
It's everything, honestly. Protecting your capital is job number one. A fundamental rule is never risk more than a tiny percentage of your trading account on any single trade.
Like what percentage?
The standard advice is usually 1% to 2%. So if you have a $10,000 account, you shouldn't risk more than $100 or $200 on one trade.
Right, so one bad trade doesn't kill you.
Exactly. It lets you survive losing streaks, which will happen. And it's not just about the numbers, it's about emotional discipline too.
Staying cool under pressure.
Totally. Don't chase losses, don't get greedy, stick to your plan. Keeping a trading journal helps massively with that, reviewing what you did right and wrong.
Makes sense.
Yeah.
Treat it professionally. Okay, let's be blunt about the dangers. What are the real risks people need to know about?
Well, number one is leverage risk, like we talked about. That amplification works both ways. High leverage means you can lose money very, very quickly, sometimes more than you initially deposited.
Okay, that's scary. What else?
Market uncertainty. Forex markets can go wild because of unexpected news, geopolitical events, elections, surprise economic data.
Yeah.
Stuff can happen that nobody predicted, causing massive, sudden price swings.
So things outside the charts can blow up your trade.
Absolutely. And finally, you have to watch out for scams. Because it's decentralized, unfortunately, there are dodgy brokers out there.
What kind of scams?
Oh, unrealistic promises of guaranteed profits, manipulated price feeds, maybe making it impossible to withdraw your money. You have to research your broker, make sure they're regulated by a reputable authority, check reviews, be careful.
Definitely. Due diligence is key. Okay, that's a good picture of Forex. Let's switch gears now to the other side. Online income streams for 2025. I read somewhere that like 64 million Americans earn income online now. That's huge.
It really is, and the ways people do it are incredibly varied. One huge area is freelancing and remote work.
Using platforms like Upwork or Fiverr?
Exactly. Those connect freelancers with clients needing all sorts of skills, writing, design, programming, virtual assistants, you name it.
And I heard some skills are really taking off, like AI editing. Is that a thing?
Oh, absolutely. With so much AI content being generated, people who can expertly edit and refine it are in huge demand. Some are making serious money, like over $100 an hour.
Wow. So AI creates, humans refine. Interesting twist.
Yeah. Translation services, virtual assistants, lots of remote opportunities.
So if someone wants to start freelancing, what are the basic steps?
Well, first, figure out what skills you have that someone would pay for online. Then pick the right platform, Upwork for maybe longer projects, Fiverr for smaller gigs.
Okay.
Build a portfolio, show people what you can do, and then figure out your pricing by seeing what others charge.
Sounds practical. What about e-commerce? Another big buzzword.
Definitely. Several models there. One that's really popular is print on demand, or POD.
That's where you sell designs on t-shirts and stuff that don't hold inventory.
Exactly. You create designs, put them on products via platforms like Printful, connect that to maybe a Shopify store.
Uh-huh.
When someone buys, the POD company prints it and ships it directly. You just collect the profit margin, no inventory headaches.
Clever. But I guess you need good designs for a specific audience.
That's the key, yeah. Finding a niche, it's crowded otherwise.
Okay. What's another e-commerce model?
Dropshipping. Similar idea of not holding inventory. You set up an online store, market products. But when you get an order, you pass it to your supplier, often someone on AliExpress or similar, and they ship it directly to the customer.
So you're the storefront and marketer. They handle the product and shipping.
Precisely. You focus on finding customers. Again, finding a niche and good marketing is crucial.
Got it. And the third one?
Digital products. This is about creating something once and selling it over and over. Think ebooks, online courses, templates, stock photos.
Potential for passive income there.
Big potential, yeah. A fitness expert could sell a downloadable workout plan, for example, create it once, sell it many times.
Nice. Okay, shifting again, content creation.
Yeah.
YouTube, podcasts. That seems massive now.
Huge. Content creation and monetization is a major avenue. On YouTube, you can earn ad revenue through their partner program. Once you hit certain milestones, like 1,000 subs and 4,000 watch hours. Plus, creators use affiliate links, recommend a product, get a cut if people buy through your link.
And podcasts.
Similar things, plus platforms like Patreon let listeners subscribe for bonus content or support the show directly. Building that audience is the first step.
Makes sense. Is blogging still a thing? Can you make money from that?
Oh yeah. Blogging and SEO are still very much alive. You can monetize with affiliate marketing, ads, maybe sell your own digital products.
SEO, search engine optimization, making Google like you.
Basically, yeah. Optimizing your content so people find it when they search for relevant topics. Driving that organic traffic is key for blogs. A travel blog reviewing hotels and linking to booking sites is a classic example.
Okay, so value creation and visibility.
Yeah.
You mentioned passive income streams too. What are some examples besides digital products?
Well, affiliate marketing is a big one, even outside of blogs or YouTube. You just need a way to share your unique affiliate link, social media, email lists.
You get a commission?
Yep. Can range from, say, 5% to 30% or even more. Some programs pay a lot, like Shopify's affiliate program apparently pays up to $2,000 for a referral.
Wow, that's serious. What else?
Stock photography. If you're a decent photographer, you can upload photos to sites like Shutterstock.
And you get paid per download.
Yeah, it might only be, $0.25 to maybe $4.50 per download, which sounds small. But if you build up a large portfolio, maybe 500 plus good images, those small amounts can add up to a nice passive stream over time. Initial effort, ongoing potential reward.
Right, scaling through volume. Okay, but just like Forex, these online ventures must have downsides too, right?
Okay.
Pitfalls.
Absolutely. Scams are definitely out there. Phishing sites trying to steal info, schemes promising easy riches. Always be skeptical. Verify platforms, read reviews if it sounds too good to be true.
It probably is, yeah.
Then there's saturation. Some areas, like generic POD t-shirt designs, are just flooded. You really need unique branding or a very specific niche to cut through the noise.
Makes sense. Stand out or get lost.
Exactly. And finally, cash flow issues can be a problem, especially with models like dropshipping. The profit margins can be really thin, sometimes under 20%.
So you need to sell a lot.
A lot. Which means you need strong, consistent marketing and sales. Otherwise, you won't make much actual income, even if you're busy. It's not just about having a website.
Got it. High volume is key there. Now, earlier we mentioned those recommended books on trading and markets. How do those apply here?
Well, the connections are pretty direct, actually. Books on technical analysis, understanding charts, patterns, indicators. That's foundational for Forex trading strategies like trend or breakout trading. Those skills transfer.
Okay. What about the mental side?
Books on market psychology are huge. Understanding fear, greed, discipline. That's crucial for Forex traders dealing with leverage and fast markets. But honestly, it's vital for anyone starting an online business too, dealing with uncertainty, setbacks, staying motivated.
Good point. Emotional resilience and risk.
Absolutely. Books on risk management, like calculating position sizes, protecting capital, that's non-negotiable in Forex. But the core ideas apply to online business too. Don't bet the farm on one untested product. Manage your ad spend wisely. Understand your margins.
Universal principles. What about the market history books?
Understanding market history crashes, bubbles, economic cycles gives you context. For Forex, it helps understand what drives big currency swings over time. For online ventures, it provides perspective on hype cycles, shifting trends, and maybe spotting unsustainable business models. History doesn't repeat exactly, but it often rhymes.
Hmm. Valuable perspective.
Yeah.
Okay, so wrapping this up, it feels like both Forex and online income streams offer real paths in 2025, but they're quite different beasts.
Totally. Forex demands technical skill, understanding leverage, managing risk tightly. Online ventures often need more niche expertise, creativity, marketing savvy, building scalable systems.
And it's amazing how technology has opened doors to both, hasn't it?
Yeah,
Allowing income diversification like never before.
for sure. And looking ahead, AI will likely shake things up even more, better trading algorithms, smarter content tools.
Yeah,
But that human element, creativity, strategy, adapting to change, I think that remains absolutely essential in both fields. AI is a tool, not a replacement for smart thinking.
That's a great point. So for you listening, as you think about 2025, which path feels more aligned with you? The analytical challenge of Forex or the creative entrepreneurial path of building an online income stream? What fits your skills, your risk tolerance, your goals? Something definitely worth mulling over.